Imagine standing in front of a boardroom full of ruthless Wall Street investors and telling them that the customer is not always right. Imagine telling them the customer come, or maybe even third. You would be laughed out of the building. Your funding would be pulled immediately. Wall Street demands infinite quarterly growth. They demand merciless cost cutting. They demand absolute obedience to the shareholder. But what if the most highly profitable strategy in the history of modern business is actually something completely different? What if the ultimate competitive advantage is simply kindness? Let that sink in for a moment. Kindness. It sounds utterly absurd. It sounds like a fast track to corporate bankruptcy. Yet a select group of rogue CEOs have used this exact, counterintuitive philosophy to absolutely obliterate their competition. They have generated billions in compound wealth while breaking every single rule taught in elite Ivy League business schools. How exactly did they do it? And why does giving away your absolute executive power make your company practically untouchable? The answer completely changes how we understand modern capitalism. We will aggressively reveal the hidden mechanics of that secret a little later in this breakdown. From the moment we enter the workforce, we are rigorously taught that business is war. It is a brutal, zero-sum game. The strong survive and the weak are systematically crushed. The traditional corporate hierarchy visually reflects this reality. It places the chief executive officer at the absolute, untouchable top. They function exactly like a modern-day emperor. The middle managers act as the enforcement class. The frontline employees at the very bottom are routinely treated as highly disposable, heavily depreciating assets in a massive, unfeeling machine. This is the financial model we all know. This is the brutal paradigm we collectively accept. But in 1970, a highly respected corporate executive named Robert K. Greenleaf published an essay that proposed something utterly radical. He called it servant leadership. He aggressively suggested taking the entire corporate pyramid and turning it completely upside down. The leader's primary job is not to fiercely command. It is not to heavily control. It is not to ruthlessly extract value from the workers. The leader's sole job is to actively serve the employees. So how does deliberately inverting the traditional corporate power structure actually generate massively higher shareholder returns? That is the exact question we are answering today. To deeply understand the immense power of this strategy, we must first examine the catastrophic failure of the traditional alternative. Look closely at the brutal corporate landscape of the late 20th century. It was the golden era of the corporate raider. Executives were highly celebrated for their absolute, unblinking ruthlessness. Take the famous era of Jack Welch at General Electric. He was widely known as Neutron Jack. He aggressively championed a notorious management system known internally as rank and yank. Every single year, the bottom 10% of the entire global workforce was systematically and unapologetically fired. It was a corporate culture built entirely on pure, unadulterated fear. And for a brief, shining moment, it looked like sheer genius. Company profits soared. Global stock prices skyrocketed. Welch was hailed as the ultimate manager of the century. But then came the inevitable, catastrophic crash. The J-curve aggressively dipped into a terrifying, unrecoverable freefall. Massive companies running strictly on pure fear began to silently rot from the inside out. Employee turnover aggressively exploded. Deep institutional knowledge vanished literally overnight. Employees became absolutely terrified for their basic livelihoods. They completely stopped innovating. They aggressively started hiding their critical operational mistakes. It was a massive, invisible crisis quietly bleeding billions of dollars from the global economy. This highly toxic internal friction was actively destroying massive corporate empires from within. The old command and control way was fundamentally broken. The global market desperately needed a lifeline. They deeply needed a completely different way to operate at scale. Enter a highly bizarre, incredibly ambitious little company from Texas. In the turbulent 1970s, the American commercial airline industry was an absolute, terrifying bloodbath. It was heavily defined by massive corporate bankruptcies. It was plagued by aggressive, crippling labor strikes. It was the absolute worst possible economic environment to start a brand new, capital-intensive business. Yet a charismatic lawyer named Herb Kelleher launched Southwest Airlines with a completely inverted, highly dangerous corporate philosophy. He publicly and loudly declared that his employees come first. Not the customer, not the shareholder, the employee. His logic was aggressively simple. If you treat your employees incredibly well, they will actively treat the outside world incredibly well. The outside world uses the company's product again and again. And that ultimately makes the shareholders incredibly wealthy. Wall Street absolutely hated it. Elite financial analysts actively mocked him. They aggressively demanded he cut employee pay. They demanded he completely slash benefits to immediately boost short-term quarterly earnings. But Kelleher fiercely held the line. He actively created a corporate culture of extreme psychological safety. He deeply understood that his flight attendants and gate agents were the actual face of the billion-dollar brand. There is a legendary story about a highly abusive Southwest passenger. This customer constantly wrote furious letters, deeply insulting the ground staff. Kelleher did not heavily apologize to the angry customer. He did not reprimand his hardworking employees. He personally wrote a brief letter to the customer saying, "We will miss you." He essentially fired the customer to vigorously protect his workforce. The operational result of this extreme loyalty was absolutely staggering. Southwest Airlines rapidly became the most consistently profitable airline in the entire history of global commercial aviation. They successfully achieved decades of consecutive, unbroken profitability. They accomplished this impossible feat in an industry mathematically famous for losing absolute mountains of money. They did not just barely survive the economic crisis. They completely conquered the global skies. Now let us heavily pivot to the brutal, razor-thin margins of the global retail sector. Traditional retail is universally notorious for paying minimum wage. It demands zero employee loyalty. It actively enforces grueling, deeply unpleasant working conditions. But a brilliant executive named Jim Singal, the visionary co-founder of Costco, decided to play a completely different, highly rebellious game. He actively paid his warehouse floor workers substantially more than the national retail average. He aggressively provided premium, highly expensive health insurance to almost everyone. Wall Street analysts were completely furious. They openly mocked Singal on national television. They famously stated that it was financially better to be an employee at Costco than an actual shareholder. They demanded he squeeze his workers to increase the quarterly dividend. They were wronged. They were dead catastrophically wrong. By aggressively serving his employees, Singal built an unstoppable army of fiercely loyal, highly efficient workers. Costco's annual employee turnover was a microscopic fraction of its massive competitors. Internal warehouse theft shrank to almost absolute zero. Their annual revenue per employee completely shattered every single known industry record. Costco routinely outmaneuvered Walmart and Sam's Club by simply refusing to treat their humans like disposable machines. They built a massive, impenetrable defensive moat purely out of extreme employee loyalty. We see this exact same phenomenon rigorously proven by modern data science. Several years ago, Google launched a massive internal study called Project Aristotle. They wanted to mathematically engineer the absolute perfect corporate team. They aggressively analyzed thousands of data points. They looked at educational backgrounds. They looked at specific personality traits. They looked at individual coding efficiency. They found absolutely nothing. The demographic data was entirely useless. But then they looked at team dynamics. They discovered one massive, undeniable statistical anomaly. The single greatest predictor of a highly successful, hyper-profitable team was a concept called psychological safety. This is the exact operational byproduct of servant leadership. When a leader actively serves the team, the individuals feel completely safe to take massive, calculated risks. They feel entirely safe to loudly admit their dangerous mistakes before they become company-destroying catastrophes. They fiercely innovate because they are not constantly terrified of being abruptly fired. So what is the actual, highly guarded secret here? Why does this specific philosophy work so remarkably well across completely different industries? It is absolutely not about just being nice. It is about cold, hard operational physics. Servant leadership is a ruthlessly efficient, highly mathematical mechanism for completely removing heavy organizational friction. Think about the massive amount of wasted human energy in a traditional, fear-based corporation. When employees spend 30% of their mental energy constantly worrying about office politics and their own job security, they are actively stealing that energy from the business. High internal trust completely eliminates the desperate need for endless, suffocating layers of expensive middle management. And extremely low employee turnover means you are not constantly burning massive piles of cash, endlessly recruiting, and retraining new replacements. Empowered, highly confident frontline workers immediately solve catastrophic operational problems in real time. They do not passively wait for slow, bureaucratic permission from a highly detached executive sitting safely in a corner office. And that is the profound secret. The massive financial investment in the employee is absolutely not a sunk corporate cost. It is a compounding, highly aggressive operational multiplier. It actively generates a self-optimizing, fiercely loyal workforce that acts as an impenetrable shield against highly funded competitors. But actually executing this radical strategy in the real world is exactly where most companies fail miserably. It is incredibly difficult to perfectly align a massive, sprawling global workforce. Tracking their true, deep engagement and actively empowering them without completely losing central operational control is a monumental, complex challenge. You can easily have the absolute best, most noble intentions in the world. You can read every single book on leadership. But without the highly specific, rigid digital systems in place, servant leadership instantly devolves into wildly expensive, highly toxic chaos. The organizational friction rapidly returns. The corporate culture deeply fragments. The highly ambitious strategy permanently dies. This is exactly why massively successful modern organizations actively rely on highly specialized, deeply integrated digital platforms. You absolutely need a systemic framework to seamlessly bridge the massive gap between human empathy and hard, operational data. You need a system that actually deeply understands the intense complexities of workforce management. That is exactly where PulseMina HCM completely changes the paradigm. PulseMina HCM is fundamentally designed specifically to manage incredibly complex human capital with absolute mathematical precision. It directly gives modern, ambitious leaders the exact digital tools they desperately need. It allows you to seamlessly track employee performance. It radically streamlines complex internal HR processes. Most importantly, it actively helps you build that highly profitable, high-trust culture without ever losing sight of the critical operational data. It serves as the ultimate operational backbone for ambitious companies that actually want to aggressively put their people first while rapidly and profitably scaling their global operations. Ultimately, the servant leadership model proves a deeply profound, entirely inescapable business truth. The absolute highest financial returns do not ever come from ruthlessly squeezing your people until they inevitably break. Massive generational returns come exclusively from aggressively elevating your people until they become completely untouchable. By fiercely inverting the traditional corporate pyramid, you absolutely do not lose your executive power. You seamlessly and massively multiply it across your entire, unstoppable organization. If you learn something completely new today, hit the like button and immediately subscribe for more deep strategy breakdowns. And let us know aggressively in the comments, what massive company's strategy should we unlock next? If you learn something completely new today, hit the like button and immediately subscribe for more deep strategy breakdowns. If you learn something completely new today, hit the like button and immediately subscribe for more deep strategy breakdowns.